Good morning and welcome to the Early Bird, and here we're looking at the S&P 500 on a 30-minute chart. And what I wanted to point out here was just a structural thing, and with Elliott wave, the corrections, wave 2s and wave 4s are a little bit different from each other at times. So when a trend is starting like this through here, the wave 2 corrections, which there'll be series of them, they're normally sharp and swift. So we're seeing these sharp and swift corrections here. But as we get sort of further into the trend, you see how we get these sideways corrections here? Like this. So these are just expanding on each other. So these are like third and fourth wave corrections. So these sharp ones here tell you that you're at the beginning of the trend, and these waves, these sideways one here, they're telling you that the trend is ending there. So we've still got another push up, and what we see here is that this sideways movement here, you can see that the trend is actually expanding, and so are the corrections are expanding and the trends here are expanding. So if we square this up in time and price, we should get higher up here still. But just to point out that there is a beginning, there is a middle, and there is an end, and that's what we're looking at. But what end are we looking at? I always thought we had to look at this trend up as an ABC, but also the Asian markets were telling us that we were looking at a third wave up. So if we look at this on a daily chart, just to get a bit of perspective here, this is the S&P 500 here. The code's up in the top corner here for these. It's a daily chart, hasn't been updated since last night, so but it hasn't really moved either. So we're still in this sort of area here. So with our if you look at our S&P 500 charts on a 4-hour chart, you would see that we're basically looking at an ABC correction through here as a flat, and that's finishing there. But we always had to it was because of this 3-wave correction here, which would have been acknowledged as a B wave. Yeah. So this move that's going up through here, it's still got a chance to be a bear market, because this rally here as an ABC would be like this, and people would be looking at all these tops here at 1340 here as being, the old head and shoulder sort of routine. So that's possible. However, this correction here that we've got here as an A and a B and a C wave here, that's what we're looking at. And on the intraday chart, then we're looking at this structure here, a 5-wave structure up. But I think that we could be at the top of this now, or we could be in the 4th wave, because that sideways correction here, this one here, is possibly the 4th wave here that we're looking at now, this little 4th wave here. So that's a possibility with another push up through here to complete that structure there. So that would be an ABC structure up, and it would fail at that point. However, the Asian markets are telling us that that would be looking for 5 waves up in their moves, and that would be so would be looking for, that would be there, the 1, the 2, the 3. We still get the 4 here, and the wave 5 heading up even higher, taking out this high here. Now, I think this is actually the case, and the reason I think that 4 is, even in the US markets here, is firstly that this particular structure moving up through here has got the sort of personality of a 3rd wave. It doesn't really have the personality of a C wave as a corrective wave, because C waves are normally a little bit lazy, and 3rd waves are really strong here. So, and this is showing the strength here. So it is showing us the nature of a 3rd wave. The other aspects are other markets, like the Dow Jones comp, which the Dow Jones is made up of 30. Obviously, the S&P is made up of 500. But if we have a look at the transports, which is a big market, we can see that it's really taken up to these highs here already, and it had more of a sort of a corrective structure within here. So it's up at these highs here. I don't know where it closed last night, but we looked at this the other day, all through here at this here. So we're seeing, a much stronger move here and coming up to these highs here, and a corrective move wouldn't do that. And it's the same with, if we have a look at the Dow Jones comp as well. Just see if I can find it here. Okay, yeah. I mean, this one here it's a Dow Jones thing as well, the DJA, and it's made up of 60 companies, so it gives a bit more of a wider variety of a look here. And once again, we can see that we are quite close to the highs up here. In fact, we're sort of past the sort of head and shoulder sort of routine. So we'd be looking at these markets here of a 5-wave structure up there. So yeah, just basically putting the puzzle together, really. That's the name of the game there. So we're looking for these 5 waves up here. So this is why I was mentioning that yesterday, one way or another, we would be seeing a softening through here in probably a wave 4, but it also could be the turning of a market. That's what we have to sort of mention to you, that there could be a serious ABC top here, an A and a B and a C top. Probably unlikely, but got to bring it into the picture anyway, because there's other evidence supporting that as well, such as the US dollar index as well, but that's got to climb above 75, and the turn on the euro as well, so we'll get to that. But anyway, our near-term main point was that to see some softening coming in through here, and we're sort of seeing that on the Dow Jones. Well, we can see it here on the S&P 500 intraday. On the Dow Jones on a 5-minute chart, this is the 30-minute chart we're looking at here. On a 5-minute chart here, we're still in this trend channel coming up through here, so we're not breaking out of that yet, but wave 4s tend to break trend lines. That's what they do. Okay, so the market's moved a little bit since over the last 2 hours, but this move down here are sort of looking as a corrective move in terms of an A and a B and a C wave to here, and then we're looking for a move up through here. It's pulled back a bit, but this is probably up for 1 and back for 2. Now, the main point here is that I think we could use, just to narrow this down a little bit here, we can use this number here, which I mentioned in the early bit there, the 12,550. So we could see that, look, if the price came under this, locked under this again at this point here, first of all, we'd be taking out this low here, breaking the trend line, and then we'd see it back at 12.5. Now, if it's back at 12.5, then we've got to see it above that as well. So the distance that travelled above that at 12.6 here would be the distance we'd seen it come below here. So we'd see it at 12.400. The main point with all this, if it's going to flicker around the 12.5 here, if that's going to be the case, then in the bigger picture, the market would need to stay above the 12,300, the top of minor group 1. So, but we're not there yet. Let's see how we go here. Let's see if we've got 5 waves up here, up for 1, back for 2, up for 3, 4 and 5 to the 12.50, 12.650, and then see the top of a 3rd wave there. So we've either got it up there or we've got it right there. So we'll see how we go. But this 550 is a line in the sand there. That would be quite helpful to use that. Just looking at our markets here in all of this. First of all, the FTSE, while we're here, before we go there, it's going to be pulled into the 6,000 here, so we can expect corrective activity within here. We're looking at that yesterday. Doing that. If this market finds support on the 6,030, I mean, actually not break through like it's already done here, not sort of breaking through here, but actually developing support on top of group 1, subgroup 1 in this case, then you can trade to the upside. Otherwise, you're going to see a very choppy situation between subgroup 1, 6,000, and subgroup 2 here. So you'd see this some sort of A, B, and C here within this. Of course, it would follow the Dow Jones to a point as well. Also, these are old highs here, 6,000 to 6,100. It's the right up at the old highs there. So this is actually leading the markets up. Right, so our markets, just bear with me, I'll flicker around here a little bit. Okay, this is the futures market here, this can do. Okay, so what we've got here, we understood that 4,500 is important. It's halfway between the 4,000 and the 5,000. Above or below here gives us the bias to trade in that particular direction, and that way you'd be trading with the trend, which is just increasing probability, and that's the object of the game, is to collect probability. So from here we've got, I'll just look at this structure from this point here. I'm not forgetting about this one here, but just this structure here, and it does appear that we've got a nice 5 waves in here in terms of the 1, the 2, the 3, the 4, and the 5. That's all sort of fitting, and that's sort of nice. Now, that can be the top of an ABC correction. So what I mean by that is that coming back to this point here, we've got either up for 1 or the A wave, okay? And then we've got back for 2 or the B wave. But let's just say we've got an A and a B, and then 5 waves up for the C wave, 5 waves for the C wave. That would be the top of it there, okay? So from that point there, we would naturally see the market work down lower. And I don't think that's the case, because this first move down through here is actually in 3 waves. You see that there? So that's a corrective wave. So that means that we should be moving up from that point. But it's not all said and done yet. We would want to, before you trade long, you'd want to be above the closest largest number, and that would be 4,600 here. So you want to be above that. This is the SPY, the continuation contract. The little C in there means it's the continuation contract, but the actual contract itself is still around the same price there. So we've got that either up for an ABC, which we've got to include. We have to be, we have to track this thing like a detective, I guess. So then we've got either up for wave 1, wave 2, and then we've got 5 waves up here for wave 3 here, and then we're looking into wave 4 here. So wave 4s can get complicated, and this ABC here just may be the A wave, and then we're looking at the B wave up to here, and then a C wave back down again. So it can get complicated around here, so just be aware of that, but we'd be looking for a 5th wave up through there. And this kind of brings in the Asian market here as well. So within the Asian market, we can look at the Shanghai market here. So what we're looking at here is we're looking for a 5-wave structure, and we're looking for this, something like this here. Well, in fact, what I was looking for here was at the minor trading level here of 8 here, we're looking for 5 waves up to there. So we can kind of see that in there in the 1, the 2, the 3, the wave 4 here, and the wave 5 here. This wave 5 here will also have 5 waves in itself as well, and I think that it's probably got a little bit more to go like that. So I think that's a 1, a 2, a little 3 in there, a little 4 back here, a little push up here, meeting supply over here, and then being forced back here. So what we would see from that point after these 5 waves up, the normal is to see a 61.8 retracement level back into this area here. So we'd see it back into this area here, but let's just sort of see how we go with that. Markets normally move from one support level to another, so in this to where the volume is sitting, so that's probably where the volume is sitting there, in this little area here. So I'd expect it to vibrate within here. Now the point being here is that because we've got 5 waves here, yep, we'll get some sort of top in here, and this ABC here would also line up with the Dow Jones at the top of its 3rd wave up the top, and then we would see from this point here, we'd see another push to the upside through here, retesting the 3,000 here, the major trading level here, but would also be looking for a stronger push up again as well. So we have to look at it in terms of an A and a B and a C, but hopefully if all's on track, we'd be seeing a much stronger move like this to the upside through there. So we'll see how we go with that, because behind all of this is this pattern here, and this pattern here is saying to us that we've got down for an A wave, a B wave and a C wave as a corrective move, then up for one, an A and a B and a C, and we're just seeing this take off here. And we've been tracking this for quite some time here. We've been tracking this down and the turn here, and lining this up with the other Asian markets as well, because some of them are leading quite nicely, like India. So hopefully we fit in that mix there somewhere with our market. Some of our markets are sort of ready to turn as well. We need to watch BHP and CBA as well. CBA is leading our market, and that needs to be noted. It's been trending up for 19 days, where BHP's only been trending up for 11 days, and that's being led by, well, Greece, I guess, in one way or another, isn't it? You know, but at the same time, before all that started as well, being focused on the base metals and more so the copper market here, and I've just sort of run with that because that's where the volume was in the market, so, and some stability as well. And yeah, so the copper market and the Australian dollar for me have sort of leading the race. They're giving us that sort of insight into further movements up. The copper market was up a bit last night, but all I can sort of say here is that at some stage we'll get to the 450, but it's highly likely that we have a fourth wave correction in here, which will be time consuming. So we just need to allow this to play out. But the point being here is that it's positive, and it certainly helps BHP locally and also in the US as well. But you want BHP in the US to find support on the midpoint, the 95, and it's just vibrating around that for the time being. So, but it's also at its on the local market, it's at its 38.2% retracement level. So it will struggle from where it is there. So yeah, expect a softening there, and then hopefully, fingers crossed, then a push up after the softening there. So, but it never hurts to take a profit at your price, at your calling, and that's what the levels are there for. They are simply to teach you about price, and taking profit at a certain price gives you a sense of control, not in an ego sense, but you need to control as much as you can in this game here. Okay, so copper's fine. Oil's following stock, so when we're looking at stock here, we're looking at that pattern across the 95 on oil, and that's pushed to the upside now. So I'll just want to zoom in here on the sort of latest contract here. Just a second. Okay, so we were sort of tossing around that we had an ABC correction here, so we'd be moving higher. We look at this first 5 waves here. Well, this even could have been the 5th wave here of failing, but we just had to see it play out here, but being above 95 was the long. So now it makes it a bit clearer. Now we've got up for 1, back for 2, and the push just above here makes it up for the 3rd wave going up through here. So the 3rd wave up through here, we'll see a little 4th wave across the 96.50 here, and then we'll see a continuation push to the upside there, and we'll see the next largest correction sort of unfold across the 98, but this is a retest of 100. Now, if stocks are going to continue to push to the upside, then oil's naturally going to follow. So we need to reassess the situation here. So this A wave that we've had here, we would need to look at that as a wave 1 and a wave 2 back to here, and a wave 3 to this point here, a wave 4 to here, and a wave 5 up to here. So we're developing an impulse wave to here, but once again, this will just follow stock. So let's just use that as our main indicator here. Right. Okay. The other interesting aspect over last night was gold moving back above the 1500 here. It's tuning back in with stock as well. So, yeah, because the US dollar index actually pushed up last night. So that pushing up and gold pushing up together is a little bit uncommon, but there you go. So this five-wave structure here can be considered an A wave now, and a B wave over here, and a C wave here. It does appear that in this structure here we're getting impulse waves to the upside, so we'll start to tune into that, and that would be up for 1, back for 2, up for 3, cross for 4, and up for 5 into this area here. So we'll see some sort of ABC correction back from here, but um, the premise of the situation is that you need to be on the right side of the closest largest number, and being above 1500 here swings the bias to the long side, and you would have been long from that point there. We wouldn't have shorted here until we'd seen a failed retest here. It wasn't the case, so being above there swings that to the positive side. So gold stocks we can have a bit of a look at now on the local market. Okay, just coming into currencies, and excuse me. Okay, US dollar index here. So this structure to the downside appears to be finished. The point being is that any push above the 75 now would be, that would just basically create a strong US dollar and a weak euro, and that's being the case, but we could also see that from the 74.72 there. That was obviously one of our triggers, and the whole subgroup 2 region here. So let's see if this pushes up. It's likely to push up. If I've made an error here, the error would be that this here is a wave 4 here, and we still have a wave 5 to go down through to here. And that error would come in this point here. We'd have wave 1 here, wave 2 here, and then we've got 1, 2, 3 to here, so 4 and 5. So we're just basically switching everything over one degree here as such. But look, anyway, the main point here is that once this is above 75, then there's strength, and also finding support here finds strength in the US dollar. So we understood that the support was at 74.50, being above the 72 here, the 74.72 in subgroup 2 here, flicks the switch on to be strength. But we would wait to see if the 75 failed here as a retest of 75 for another move back down through here. But if this finds support now on 75, then the bias will flick to the long side. And then this subgroup 1 here, the 10, the 20 and the 30, if support is found above this here on the 75.30 here, then the trend to the upside will be firmly on its way there. So essentially there's degrees of actions to take through these levels here, and that's the beauty of it. We knew that there would be some sort of struggling at the trend line on the euro. You need to have a look at the 4-hour charts on the euro to see that there's a trend line coming through from 2 previous tops coming through here. So that's really sort of pegged that in here now. So we're getting some sort of reaction here. Now, what we don't know at this stage here is we know the short term, but we don't know the medium term. So what I mean by that is that we do have 5 waves down to this point here, and we'll look at that in a minute. So because we've got 5 waves there, we'll get some sort of 3-wave counter trend. And from that 3-wave, because we've got 5 here, after a 3-wave counter trend, we should get another 5. But we don't know if that makes the situation an A and a B and a C wave down to here, or the beginning of a larger 5-wave structure. So that's what we don't know. But the short term, we can see that we've got 1, 2, 3, 4, 5. into this area here, so we'll have a counter trend and then we'll come down again. So if we look at that on a 2-minute chart rather than the hourly chart here, it becomes a little bit sort of clearer. Well, the structure in the wave 1 for here, it's a really dodgy wave 1, by the way, because it's got overlapping structures, and we talked about that last night. But that's what happens with leverage at certain times. So, but down for wave 1, 2, 3, complicated wave 4, and then down for wave 5. Now, in this wave 5 here, I just want to go into this here because it may help a little bit in terms of trading this, because from this is the wave 4 here. So the wave 5, this wave 3 here, it's got the 1, 2, 3, 4, 5 down to here. Then we've got an A, B, C for the A wave, an A, B, and a C for the B wave, and a C for the C wave. Did I say that wrong? Anyway, wave 4 to there. So then we've got down for wave 1 here, back for wave 2, down for wave 3. This is wave 4 unfolding now. So I was thinking of wave 5 down in subgroup 2 here. Okay, if that's the case, then that would be the bottom of the 5-wave structure. Then the normal thing is to get an A and a B and a C coming back up to the 61.8%, which is basically the 145 level. And if that was the case, that would push up to there to supply, trend line, whatever, supply into here, then fold back and then push up there. But the euro doesn't always come back to its 61.8 retracement levels. It can have shallow retracement levels if the market is strong to the downside. So that's what we've got to look out for there. The other flip of the coin here is that, yes, we are back at the 144 where Fibonacci number and Gann 1212 144 all meet up. So it's part of the 9 series and 72 series. So it has been playing out for quite some time, and the market's still vibrating around this in the bigger picture. So it may even just hold the ABC correction I was just talking about, may be sort of confined to this area in here. And if that is the case, then just wait for this 144 to become a really solid resistance, and then look for any short trades to the downside from that point there. Now, the other important aspect about this is going back to the hourly here, is we need to remember that the euro, the US dollar, and the mirror opposite here, the euro here, which is a basket of 6 currencies basically, but with the the German market being the sort of driver in all of this. You know, the S&P 500 and the Dow and the euro have a relationship. So if we're seeing 5 waves down through here, that means that we're possibly seeing a lead to the downside here. So this is just another reason to call a top in quite closely for the S&P 500 and the Dow at those points there. So, and we'll also see that shine up in the Shanghai markets and our markets as well. So our markets are sort of sitting at that 4-6 there, and they're in a corrective pattern there, so they can be locked in there. So anyway, just another little piece of the puzzle I thought I'd point out. The Australian dollar as well, it's still reacting from the 72 here, the 107.72. So when you get 772 together, or 272, they've carry a lot of weight. But not only that, in this particular case here, we're looking for 5 waves up here in terms of 1, 2, 3, 4, and 5, and then we're looking at some sort of A, B, C correction here. Now, this has still got further to play out here. I'll just bring this on the 2-minute chart here now. Okay, so we've got 5 waves up from the 104 to the 108, and we're looking at an ABC correction, which can come back 61.8%, by the way. So it can come back all the way down here. So looking at it on this chart here, the 5-wave structure that we're sort of looking at this stage here is we can see 5 waves down through here. Okay, so we can see the 1, the little ABC for the 2, down for the 3, the 4, and the 5 here. So that's wave 1, and that's back for wave 2. Okay. So then the next structure is this structure here. So in this case, we've come down for 1, back for 2, down for 3, back for 4, and we're looking to go down to 5 here. So that would make this an A, B, and a C wave down to this point here. Or it could extend out into a larger 5-wave structure, which would be the 1, the 2, then 5 waves down here for the 3rd wave, then the 4th wave, and then the 5th wave. Okay, so it's still early days, but normally once we understand this, if we get an A and a B and a C wave down to here, we get 3 waves to here, yeah, then we can expect that top to be taken out here, okay, in the next move up. If this develops 5 waves down in terms of 1, 2, and then 5 waves down for the little 3rd wave, then the 4th, then the 5th. If we get 5 waves down here, that means that we're going to get an ABC back up and then another 5 down. So if we get 5 large waves down here, then we'll get 3 back and then another 5 down. Okay, so that's going to line up with the other markets as well. So normally in corrections, when they start, no matter what size they are, unless they're huge, then it's my own personal thing is that mainly I prefer to allow the first leg down to unfold, and once we know that it's either 3 waves or 5 waves, then we can break it down, because basically there's 12 types of corrections. But if we get 3 down or 5 down, out of those 12 corrections, we can pretty much just wipe out half of them, and it leaves us 6. Out of those 6, there would be probably 3 strong probabilities, and that gives us something to work with. So we've got some clues at that point. So yeah, but you know. If you're a gunslinger and you're happy on the trigger, then the situation here would be to work subgroup 2 here to the downside, especially the 72 here. That would be the 680 to there, the 72 to here, the 65 would be in here, the 107, so should be up there. If this market finds support back up on the 107, then you can go long, okay? So, but if it fails here, then you can use the 90 and all the little sub-levels in between that. But, yeah, at this stage here, you can see that it's vibrated across there, it's dropped down, it's come back, it's retested it, so it's in a weaker position. So this move down through here is likely to be an impulse wave down through here. So we'll see an A and a B and 5 waves up here to retest this again. So a failing from here would see you to the downside from there. So yeah, use the 90 as support or resistance to take the next trade from that point there. So it just depends on your trading time frame. The 2-minute robo works well on here when the market's running and volume's coming into it. So the 2-minute robo and using all the little micro levels is a way to scalp this, as long as you get your spreads down to a pip. Okay, I think that's it. Yeah, okay, that's it. Just to recap here a little bit. The 4,600 on the cash market on the SPY. If this finds support there, then you want to be on the right side of that. Just be aware that you could be in a larger correction here. If support is found on top of the 30 here, then we can go to the upside. But you will see Combank and BHP soften at their levels where they are now. So just be aware of that. But just be on the right side of the closest largest number and use your skill set to work out if you've got support or resistance. Alrighty, that's it. Good morning and good luck.